big news today in the financial world around cryptocurrencies. Recently, there's been some changes with Bitcoin on how companies can market the value, loss, or gain of the Bitcoin holdings that they have. We'll read an article here to take a deeper dive into what that means. But first off, we'll start with a tweet from Michael Saylor. Michael Saylor on Twitter, or X I should say, says, fair value accounting is coming finally to Bitcoin. This upgrade to the FASB accounting rules eliminates a major impediment to corporations adopting Bitcoin as a treasury asset. This article today is from NASDAQ, taken, it looks like, from the Bitcoin magazine. FASB votes in favor of fair value accounting for Bitcoin. In a long-anticipated move, Bloomberg Tax reported that the FASB rules set to introduce a new fair value accounting for Bitcoin and other cryptocurrencies. These new rules aim to provide a more accurate reflection of the market value of digital assets and bring greater transparency to the financial reporting of companies that hold cryptocurrencies. The rules are expected to be published by the end of this year, 2023, and will go into effect by 2025. But if companies want to, they can use the new rules earlier. The article says for years, the valuation of cryptocurrencies like Bitcoin has been challenging due to the volatile nature of these digital assets. FASB's moves to introduce fair value accounting rules will require companies to regularly assess the fair market value of the digital asset and report any fluctuations in value as part of the financial statements. We'll get into this in just a second, but fair market value means the current value of the holdings. So this means, again, as according to the new rules, that if the price of Bitcoin surges or plummets, companies will have to reflect that and change their financial reporting. Under the old treatment, listen to this, accounted for Bitcoin as an intangible asset, which meant if the price goes down, then for what companies bought it for, they had to take an impairment charge on their books, even if they didn't sell it. But if the price went up, they couldn't receive any benefit on their books unless they sold the holdings. Now, under fair value accounting, companies can report the realized gains or unrealized losses or the actual fair market of the holdings that they have. So this can make companies more likely to add Bitcoin to their balance sheets and become long-term holders because now it can be reported on their financial statements. And from the regulators' side, investors and regulators will now have better access and more timely information about the financial health of a company that actually does hold Bitcoin. So it's more of a transparency piece for a lot of these companies. The article continues that as Bitcoin becomes more mainstream and as adoption increases, it's going to be becoming more and more apparent that fair market value is going to be needed to have a better transparency in the market. However, if you have fair value accounting, it does come along with some challenges, again, due to the volatility of the digital assets. So it's going to require auditors to have a much better understanding and expertise in assessing the digital currencies, as well as the companies who hold them to have better valuation methods and how they're going to be valuing the holdings that they have. However, despite the challenges, the introduction to the change into the accounting rules for Bitcoin and other cryptocurrencies is a significant step forward for the cryptocurrency industry, and I would argue for the traditional financial industry as well, because now they can market those prices on their balance sheets. We'll see more of what this happens and how this may change the holdings of Bitcoin in the next couple of months and in the next couple of years once these new rules come through. We'd love to know your thoughts. Drop a comment in the comment section below. Do you think that this fair market value would be a good thing for the crypto industry, good thing for traditional finance? Is that a bad thing? Let me know your 2 cents down below. Thank you so much for watching. Make sure to stay curious, stay inquisitive, stay educated, and stay subscribed for the next time we get together. Thank you so much for watching, and we'll see you on the next episode.